Trade location is king, and the best location in trading is usually going to be your most profitable. So the idea here is, what should you focus on? Profits, losses, risks, or what about if your fundamental priority is location? I did a prior video recently, best trade setup. It was the lower Bollinger Band, and we recently had this a few days ago. And it really, for people that took the trade, you took that long off the third day of the daily Bollinger Band. It was all about location, just like real estate. The framework for the mindset is, again, not the profit so much, but when you're putting risk on, location should be the priority. And that's why I say location is king. So the title is the best location in trading. Now, trading is a process, in my opinion and experience of many years, is that number one, it's not a one-shot, one-kill deal for location. If lower Bollinger Bands, for instance, or upper Bollinger Bands are hit on a daily very infrequently throughout the year, then what you're trying to do is not just wait for those higher time frame location spots, but you're also trying to look and work on a lower time frame. We're going to focus on the higher time frame on the weekly for time and price location. So on the left here, I'm going to focus on the S&P 500, and we've got the upper Bollinger Band at 6281. That's a ways up. Relative equal highs here. So for December, 3 weeks. And then what happened in that 3 weeks, we had the Fed come in on the 18th, prior week on the 18th. And look at what price did. The location of the price candle on this discount wick pierced the middle Bollinger Band. This is on the weekly, mind you, but it quickly retreated, and this block of the candle stayed where we currently are in the current week, which is a holiday week. You can see this is Friday Globex, where we currently are at 6086.75. And you can see here, I've got marked off where we are. I just want to get my bearings on the higher time frame. Let's go to another chart with a lower time frame for price and time location. The daily S&P 500, this is the micro futures again, and the upper Bollinger Band 6203.74, the lower 5939.45. And you can see here, this is the last day of the week, Friday, the 27th in Globex, and we're above the 3 EMA, which is above the middle Bollinger Band, 6071.57, middle Bollinger Band with this dashed line, and the 3 EMA coming in at 6082. Relative to location at a premium or a discount, I would say I'm pretty neutral because, number one, it's a Friday, and number two, the end of the year, Monday, the 30th, is T+1 settlement, meaning all the big institutions that have to close out their positions for the month, for the year, on a settlement basis on Monday. And I'd much rather see price volatility for location on Monday than a Friday. If I were them, I'd try to get people on the wrong side of the boat on a Friday and pin it higher and then take it lower on the last day, trading day for settlement of the year, which is Monday, not Tuesday. So that's just what I'm thinking here as a possible narrative going forward for trade location setups. And I'm not really liking here because we're in the middle, basically. Don't diddle in the middle, they say. Next chart. Let's compare trade location to the neighbors. On the right of the S&P is the NASDAQ 100. You can see price on Friday Globex is above the 3 EMA blue and the 9 EMA red. On the far left, Bitcoin below both the red 9 EMA and the 3 EMA blue. That's the Six Sister on the far left. In the middle, what we have is I've marked out with this dashed line. 6062 is the previous day low. But to do that, in order to do that on a Friday, closing out holiday week, which is statistically a high probability for higher prices on a historical basis, then they're really going to have to take price below the blue and the red line to tag that and break for a sell side liquidity lower than 6062. I don't like the odds on the probability just because the timing of that price location on a Friday, and Fridays statistically for me is not the highest probable day of the week for me to be trading. As I said, I prefer Monday and Tuesday of next week. Next chart. Let's look at trade location, US dollar on the left, VIX on the middle, and that is for, of course, volatility and the 10-year Treasury. These are micro futures on yield, 10-year Treasury yield. So I'm going to start with the US dollar. It's elevated at 108,117. The US dollar is inversely related to the equity indices. So if we keep going higher on the dollar, there's going to be a lot of pressure on the stock indexes to discontinue going higher. They're going to want to go the opposite direction. Volatility is getting low, 3 days, and we're on the fourth Friday here, 14.73. I've got this red line marked out at 12.77. And then this is the big green candle. All three charts, the biggest green candle is the Fed from December 18th, Wednesday. And they did a rate cut. So rate cuts, why are yields going up when they made lower interest rates? So the market's disagreeing, and that's a problem again for stocks. So the dollar and the Treasury 10-year, we've got 4.577. This is on the futures contract on micro futures 10-year Treasury. Okay, so I'm watching this carefully. The location of where these three are going to be really extremely important to me Monday, Tuesday, and then, of course, going into 2025. If we can hold these yields up and the dollar up, I'm definitely looking for a lower mean reversion on the stock indices. So I'm going to watch that closely. Next chart. Price location on the Magnificent Eight that the top five. Apple, unstoppable, beginning of December, just straight up to the moon. 259 close on Thursday, New York hours. NVIDIA, we started out high, went low, but we recovered a lot. Tesla, same thing, but much less of a dip, is staying strong. 454. If you own Tesla, you're a happy camper. Google Alphabet, very strong chart. We've had ever since this gap up in first part of December, it's stayed up and it's not going down. So that lawsuit, class action, really did not have any lasting effects. On the left, Microsoft, not so hot. Oil, no. Bitcoin, no. Dollar, yes. So it's the top four tier and the dollar, and the weaker have been Bitcoin. Oil is just flatline. I don't know what's going on with it, but it's going nowhere fast. Microsoft, boring. It's a big part of the S&P cap weighted index, but it's not like it's declining, but it's just hanging in. And then Bitcoin, we've talked about that. We'll go into a chart and analyze the levels on that. Bitcoin daily chart. So we'll look at price location. This big black bar was, of course, the Fed, the 18th of December, last Wednesday. And you can just see straight decline 4 days in a row, but we did not hit that lower Bollinger Band. Currently, on this Friday Globex, as I speak, we're in a discount below the middle Bollinger Band, coming in at 99.278. That's middle Bollinger Band, and price is 96.795, and the 3 EMA is 97.032. Where are we? In location, basically, we're below this daily fair value gap, and we're above a higher time frame weekly fair value gap. That's way down here below 82,000. But let's talk about right now on a fib from the decline to the low. If we're going to get above the confluence, is this middle Bollinger Band is confluent to the 50% Fibonacci, and that is from, again, the decline on the 18th of December, which is FOMC, and the low. And that low was last Friday on the 20th, and that was down there in the 92,000 and change. So Fib is 99,660. So location-wise, am I bullish on this? No, it's in the middle. Just like the equity indices, I'm very cautious right now. It's end of the year, and I don't really trade Bitcoin, but I want to use it as a reference. And I mentioned already, in comparison to the NASDAQ, it's weaker. NASDAQ would be the strongest, then the S&P, and then the weak sister, again, the sixth sister is going to be Bitcoin. So that's what I've got on the Bitcoin. Next chart. Okay, we're getting to the nitty gritty on the S&P futures. So you already know the volatility that I'm looking at right here is getting into the lows of the prior to the volatility spike we had. The 12s are down here, and here we are on a 4-hour. So I like the 4-hour. If I can't really spot anything that I like, I've got to get more clarity on a lower time frame for location. And the 4-hour location, if you'll look at these relative equal highs on the 4-hour, that gives me a lot of caution here. Now, the one thing I will point out is the Bollinger Bands, the top 6150, the bottom the bottom at 5966, and the middle 6058. That is curling in. So we've got contracting Bollingers that have already started curling in. However, I don't like these relative equal highs. If I'm going to fade the highs here right before on Friday and the holiday week, there's a good chance we close above 6,100. We could even make a run for 6,120 and higher, just so they could pin it. Like I said, get the boat all on one side and then do a rug pull on Monday. I could see that happening. But before that, if we were going to go lower, when would we? When could we? Maybe it'd be the early AM hours. And so again, this dotted line here is representative of the prior day's low. And if we were going to hit, that's still above in a premium on the middle Bollinger Band. So that middle Bollinger Band, again, 6058. So not a lot of big gamesmanship here. I'm not putting on any new trades again for Friday. So that's it for the 4-hour. We'll go down and wrap it for a 15-minute S&P chart. Welcome to the best for last trade location charts that I use for the micro E-mini S&P futures. On the right, a 15-minute. On the left, a range Renko with, I've got Keltner lines. So this just gives me a real good sense of direction. Keltners are like Bollinger Bands, I always say. The red here, 6043, you can see here we're very elevated, closer to the blue. The blue here coming up in the 6120s on the mid. And so the red, 6043, doesn't look like we're going to come anywhere near the lower here, 5959. So we're in the premium on the left Renko chart. So let's look at the PD premium discount arrays. On the far left on this rectangle, you can see is a daily fair value gap. And what we've not done in the prior day is violated this daily fair value gap consequence encroachment. That's like the 50% Fibonacci. And that's coming in here just below the prior day low at 6062. So price is respecting this. It does not want to have a bar that closes the body of a candle below this. You've got to understand that. On the line I'm pointing out right here, this is the first percent RTH open first fair value gap. This is one of the new things I learned from my mentor, ICT, is measure this out, carry it forward. So this was the first day after Christmas. And so that's coming in the low 6080s. And the gray box is the PM afternoon open range. So we've got a lot of business done in the afternoon here. And then you can see that we closed mostly below it in Asia, which we're in right now as I shoot this video. And the high for the prior day was 6107.5. And that just was the buy side liquidity breakthrough above the Asia. So mostly we got this again, this higher price above 661 happened, began early Globex or late PM afternoon. And then right now, here's where we're sitting. So not real appetizing. Again, no new positions, but that's the structure. If I was going to look at anything above it, this 6120 is a new week open gap area back from mid-December. And below here, do I like anything? We do have way down here of day Christmas Eve at 6030, but to get there, they've got to break that consequent encroachment right here of this big daily fair value gap. So that doesn't look like it's happening. It looks like they're really going to not want to break this at this point. We'll have to see where New York opens on the midnight open and then London. I'm going to look at the London time frame real closely, see how we do in the price, and then there's no real news catalyst for Friday. So like I said, not an appetizing meal that I want to consume for putting risk on for Friday. So it's still cool to tape read, and that's why I'm reading all this. So you look at these two charts, put together the location, and add the time element, which is crucial to price location, and it's just not the time. The time is going to be, again, I pointed out in this video, it's all about T+1 Monday and Tuesday, the actual calendar end of year. And that's how I see it. So price location, we've gone from the weekly to the daily to the 4-hour, and then here we are to the Renko range and the 15-minute. I want to thank all the subscribers and the new viewers and encourage you to hang in there if you're interested in the markets. I read price action and put out videos each week. I try to do 2 to 3 if I'm lucky, 2s on average. And I'm a trader. I put my real money into the market, not prop account, fake dollars, real money, brokerage account dollars. And I also trade options. So thanks so much for viewing and take care. Hope you have a great weekend. Aloha. Bye.